Hey guys, TommyBryson here, and as a long-term investor, one of my nightmares is basically having to sell my investments, okay? I'm all about when I buy, I'm holding on for the long term. That means 5 to 10 to 20 to 30 years, a very long time. So I never actually want to have to sell something when I don't actually want to and when it doesn't make sense to actually do it. However, let's say for example, you have a bunch of debt, right? And this debt is costing you 35% or 20% or 15%, and your investments are not growing that fast. Now, at that point right there, does it become okay for you to go ahead and sell your investments and use that money to pay your debts and potentially even become debt-free, dependent on how much money you actually have invested? Well, that is what I'm gonna break down today in this video. Now, if you guys are new here, I post videos literally every single day, so make sure to also subscribe and hit the bell to get notified, and on top of that, also destroying the like button. Now, the very first thing is this, guys. Overall, the answer is going to be, it depends on the money you have, the investments you actually have, and on top of that, why you actually want to do it, okay? So it's not like, hey, it works for everyone the same way. The answer is no, it depends, and that's why you want to watch this whole video, because basically, I'm going to give you guys 3 situations on when you want to sell or keep or basically sell and reinvest, okay? I'm gonna tell you everything in this video. Now, the first situation is this, guys. A lot of people that don't know really anything about investing, sometimes they invest money into something and sometimes they get very lucky. Meaning, hey, I don't know anything about valuating a business or intrinsic value or balance sheets and income statements, but basically, I really like this company and I grabbed some money and I invested into it and I made a big chunk of money. Now, do I hold on to that, but I know nothing about that investment, or potentially do I sell it and pay off my high interest debt? Well, the answer here, guys, is basically the real question is, hey, Tommy, I got very lucky here. I don't know how long my luck is going to last, so do I sell now, get my luck, basically the money I actually made, and pay off the debt I actually have? That's the real question there. And the answer is, well, the potential risks of you leaving your money, for example, in an investment you know nothing about, the answer is you might go ahead and lose all of your money. So the idea is, if this money is not in a retirement account, here is what I would do. Hey guys, my name is TommyBryson. I invested into Tesla, into Bitcoin, and also Gamestop at its peak, and I made a ton of money. Why? I can't tell you why. I don't even know what the value, the fair value, intrinsic value of these companies actually are. But all I know is I made money and everyone else told me to invest into it. But I don't know now because basically I also own a ton of debt, okay? So what do? The answer is very simple. In this case, it is okay to go ahead and say, hey, I am going to sell those investments, okay? I'm going to make a big gain. And on top of that, I'm going to set aside money for taxes. I'm going to use the rest of it to pay off the debt I actually have. But Tommy, this is not a good advice because basically, well, I'm giving up compound interest. In reality, you're not. And here's why. Because again, you invest into something you know nothing about. That's called speculation. The real risk of that is basically you run the risk of losing all your money. And as an investor, your job is to say, hey, every single 6 months or 12 months, I'm going to sit at my desk or at my little table and look over this investment and make sure it is still healthy. If you can't do that, basically, you're running the risk of losing all that money. But tell me, if I sell that investment and it goes up, I'm going to feel so bad. The answer is yes. But if you sell an investment and it goes down, you're going to feel so smart. So that's why you can't depend on price when it comes to, hey, I feel smart or I feel dumb. The answer is no. You depend on knowledge. I know what the value is. If you don't, be honest with yourself because basically you're running a massive risk. So in this case, taxable account, I don't know what I did, but I got very lucky. The answer is it's okay to sell those investments, okay, and then grab that money and pay debts, but also keep some money on the side for your taxes. Taxes are important. If it's less than a year since you bought it, you can get charged ordinary tax. If it's more than a year and 1 day, you're going to be charged long-term capital gains tax. And that's around between 15 to 20% and sometimes even just 0%, okay? It's a lot less money, so keep that in mind also. But don't hold on to something you don't understand for the sake of saying, hey, it's a sure thing because basically everyone else says that. That is not what you want to do. You want to know exactly what you're doing when it comes to investing. And if you don't, it might be a good idea to sell it, pay off your debts, and then move on to something else. Now, situation number 2 is a lot more different and also a lot more difficult. Well, Tommy, I know exactly what I'm doing. I invest into index funds, into ETFs, and I also pick stocks, but I know how to pick a stock. I know what a 10K form is, a 10Q form. I know how to basically analyze the balance sheets, the cash flow statements, an income statement. I know everything about this stuff. And I also know intrinsic value and fair value. I know everything. Earnings per share. I know everything, Tommy. I know exactly what I invest my money into, and I know for a fact this right here is a good investment, whether an index fund or basically a stock picker. Now, this question is a lot more difficult, right? Because basically, you know for a fact what you're giving up. And you're giving up basically a lot of potential gain and a lot of potential growth if you go ahead and say, hey, I'm going to sell it and pay off my debts and call it a day. However, that is not the real question you're actually asking. The real question is, hey, Tommy, should I continue to invest while I still have this large debt right here? And that debt might be, again, at 10% or 20%. Or 30%. If you're making 20% consistently over the next 30 years, you'll be almost as good as Warren Buffett. That's how hard it actually is to do that, okay? So the answer here is basically, well, if I have this investment, I understand, and it's making me money, do I keep investing? The answer is no. The good idea is to say, hey, I'm gonna pause all of my investment activities and just grab that money that I'm not investing anymore and grab that money and pay off my debts and finish a lot faster. But would I sell just good investments? The answer is no. I would not sell my good investments because basically I understand what I'm investing into. I know the true value. And I know for a fact that in the future, that money is going to make me a lot more money. So what I would do is, although there are a lot of good opportunities out there, I'm going to pause for a second. No more investing, but I do have that money there. And I'm going to grab all the extra money I have now and put it towards debt. That's the core idea. That way, once you're done with debt, you can resume your investing, okay? Now, just to put this into context, guys, okay? If you have, for example, $10,000 invested into a very good investment that pays, for example, 10% on average every single year, like an index fund or an ETF or whatever you actually invest your money into, right? And you understand it. And you did this for the next, for example, 30 years. That 10K would turn into $173,000. That is a lot of money that you're going to give up by paying off your debts. And that's why I say just pause it. On top of that, if once you're done with debt, you resume into investing, for example, $500 every single month additional to that 10K. The answer is, well, in 30 years, you would have around $1.2 million, okay? So overall, the real answer is, hey, don't sell your investments, but pause your investments while you're actually going ahead and paying off that high interest debt currently. Now, by high interest, I mean, for example, student loan debt. Tommy, it's not that much. It is still a lot of money, trust me. On top of that, well, don't trust me. Here's why it's a lot of money. Because even though, for example, you might make like 10% on your investments, okay, on average, the answer is, well, 2% goes towards taxes, 2% might go towards inflation, and also 1% might go towards fees. So in reality, it's still like around 5%. So your student loan debt is still not super cheap to the point where you're saying, hey, I'm just gonna keep investing. The answer is no. You also want to pay off that student loan debt. Credit card debt, super high. You want to pay off that also. Car loan, super high. Pay that off also. The one you might want to wait a minute is basically on your mortgage. So you want to pay everything else except the mortgage. And once you're done, what do? You continue to pay your mortgage, obviously, pay it off early also, while you're still investing money. That way, in that long period of time, you have investments growing, but you're also having your mortgage go down also. That is what I call a perfect storm, okay? My mortgage is going down. My investments are going up. How do you do that? You invest and pay your mortgage at the same time, but you cut out all the other debt. Consumer debt is usually not really good debt. Getting debt to actually go out there and buy things, usually not good debt. Even business debt sometimes, okay? Sometimes you just want to be patient and just wait, okay? That's the whole idea there. Now, the third situation here. Tommy, all right, what if I have a retirement account? I have a Roth IRA, I made some investments. It's mediocre investments. So for example, I have a Roth IRA or 401k account, and I know exactly what I was investing into. It's actually pretty good, okay? What do I do here? Do I sell it? Do I not sell it? The answer is, well, the first answer is, well, if I have investments into my Roth IRA, and these investments are basically speculative. I don't know what the heck I was thinking and what I was doing, but again, I got lucky. Do I sell them? Although I'm going to get penalized. The answer is, well, not really. Here's why you won't get penalized. As long as you sell the investments and keep that money in the account and reinvest it back into something you actually understand, you're not going to get penalized. And that's what I recommend. So for example, if my name is Tommy, which it is, and I invested, for example, into Tesla, and let's just say I don't understand Tesla at all, and I made a lot of money, I might want to go ahead and say, hey, let me sell that investment right there, okay? Grab all that money and put it into an index fund or into a stock I actually understand. That way, I don't carry the risk, but also that way, I don't get penalized by withdrawing my capital gains from a Roth IRA account. That's the idea. On top of that, if I have a 401k account, well, this is crazy, right? Because basically, they have crazy penalties. So if you take money out, that's around 10% penalty. On top of that, the money you take out is also going to be taxed at an ordinary rate, which means if you take out around $10,000, well, you'll only have left after taxes and penalties around $6,300, meaning you just lost around 37% of your money just like that. So in that situation, I recommend again, okay, you don't want to sell. You want to pause your investments and again, keep basically paying off your debts, okay? That's the idea. It's going to take some time, but the answer is it's better than losing a ton of money. Your Roth IRA, traditional IRA, whatever it is, usually if you made a mediocre investment but got lucky, you might want to sell it and reinvest it back into something you actually understand. That way you don't get penalized. Although with a Roth, you could take out your contributions penalty free, but again, even then, I still recommend you just keep that money in there and reinvest it back into something you actually understand and then just focus on paying off your debts. Guys, that is what I recommend, and that is exactly what I would do. If you do, for example, go ahead and say, hey, I'm gonna go ahead and basically take the money out. Well, you have penalties to think about, all right? You have taxes to think about, and on top of that, you also have compound interest to think about. And you don't want to think about that 20 years from now because basically you gave up a lot of money. So just be patient, pay off the debts, and basically just resume investing when you're actually done with the debt, okay? Guys, I'll see you guys next time. Thanks for watching this video. If you liked it, well, like this video. If you have any comments, well, comment down below. On top of that, also, if you're new here, subscribe and hit the bell so you're notified. On top of that, if you guys want to text me or talk to me one-on-one, join my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And on top of that, before I go, if you want to watch the video on paying off debts and the best strategy for it, the answer is here's that video right here. And click my face right now. I'll see you guys tomorrow. Thanks for watching, and as always, peace.